Ladies and gentlemen, boys and girls, and children of all ages, we are back here live at the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. If you haven't done so, go ahead and make sure hit the subscribe button, hit the bell icon, hit that like, comment, and share button. Glad to be back here today doing a quick, not a quick episode. It's going to be a little lengthy episode, more of the podcast, so that what you guys and girls are seeing today, we're going to be talking about, the stock market going up 200 points a day. The jobs claims report came out, dropped 200 points. We're going to be looking into real estate, the sentiment of real estate market. And we're also going to be talking about, most importantly, we're going to be dropping some gems. We're going to be dropping gems on companies that will benefit due to a rise in interest rates. So as you know, right now, everybody anticipating interest rates to start to take off and rise. So that's one of the things that we're going to be looking at and talking about as well. But if you already hit that like and subscribe, comment, and share button, let's first get into what is the market doing out here. And if you are catching it live, don't be a stranger. Go ahead and say hi and tell me where you're from. If you are catching this live, share this with all your friends, your cousins, stuff like that. Let's have a community for the next 45, 60 minutes that I'll be on live tonight, because I have to do my show in Hawaii here in about 40 minutes. Then I'll be on the Sip and Talk show. So y'all definitely check us out over there. Anyway, ladies and gentlemen, we're seeing the market right now is moving sideways, I would say. You know, it's very volatile, and it's so volatile to the point where I don't know. It seems like it's bipolar. I don't know what's going on with it. So right now you're seeing the Dow Jones went up 200 points a day. But as you look at the market overall, it's consolidating, what people call consolidating. We're not in a bull market per se. We're not in a bear market per se. We're kind of moving sideways almost. But right now, so when things are moving sideways for me, I just kind of sit back and I just hold off and things like that. So the other thing is, we're also, when I see the market moving sideways, I just sit back and see what the market is doing. What is it telling me? What's going on? And right now it's too convoluted. One day it's kind of up a good bit, then it's kind of back down. The NASDAQ is just getting beat up so far as we close out the first quarter. It has been the worst performer of the top three, followed by the S&P 500 and the Dow Jones. So when I see markets kind of all over the place, we have a lot of volatility, but no direction, I kind of sit back and just kind of wait. I don't just keep jumping. Right now, I feel as though the technology sector is on sale. You know, I said it all the time, and, you know, they were the darlings last year. They're not the darlings this year. But, hey, we got a sideways consolidating market. Now, when I look at this, I started looking at economical data. When I see the markets moving sideways, you know, when the market's consolidating like that, it's going to take off in one direction, either it's up or down. By me being the bullish person that I am, you know, I'm going to be on the bullish side. I believe the bullish side is the upside. I believe the market is going to go up after it gets done consolidating. So what am I basing that upon is I'm looking at, okay, what's going on? Let me look at some of these economical data. So the first thing I'm looking at right here, I have put up my screen, is the Jobless Claims report came out today by the Department of Labor. So, you know, the Jobless Claims report is pretty much going to tell you what's going on, you know, jobs. You know, I mean, jobs are a leading indicator. It's telling you where the economy is headed. If people don't have jobs, people are not going to buy houses, cars. They're not going to go to the movie theater. Well, people are kind of not doing it anyway. But a lot of things are going to be very big when you look at the Jobless Claims report. So what we're going to do here, I'm going to share my screen, and we're going to look at the Jobless Claim report, and we're going to read it. Now, the key into the Jobless Claims report is I like to see who's hiring. If I can see what sector, sometimes I can see what sector, and if I can do that, that is great for me. So let's take a look here. 1 second. Okay. Let's take a look here. Let me blow that up a little bit more. So what I'm sharing on the screen right here, for the people that can see the screen, this is the Jobless Claims report that came out today. Now, of course, this came out 8:30 a.m. today, Thursday, March 15th. And here we go. In the week ending in March 20th, which was last week, the weekly jobs report, the advanced figure for seasonal adjusted initial claims was 648,000, a decrease of 97,000 from the previous week revisited. The previous week level was up by 11,000 from 700,000 to 781,000. The 4-week moving average was 736,000. It decreased to 13,000. The previous week, revisit the average, went was up by 2,700 from 746 to 749,000. So, okay, so we're seeing here we had this big spike last year. We're coming out of these. So when you see this, okay, this could be a good thing. Maybe people getting back to work. Maybe some people just stop applying for unemployment, but people could be potentially getting back to work, which is a good sign for a bullish indicator on the market if people are working. Let's see here, the 4-week moving average. Let me see if I can get down to seasonal unadjusted data. Okay, the decreased number of actual claims under state adjusted to see, and this is right here saying initial jobless claims. How many people just walked in and filed for unemployment, right? So the people, as we see this number decrease and decrease and decrease, this means less people are walking in filing for unemployment, which could be an indicator of, hey, maybe the economy is getting back up. This could be a bullish indicator for what we're looking at. Okay, during the week ending in March 6th, extended benefits were available for the following states: Alaska, California, Colorado, Texas, Virginia. Okay, that's cool. I don't want to hear about that. Okay, the highest uninsured employment rates weekly March 16th was Pennsylvania. So Pennsylvania was the highest last week, followed by Nevada, Alaska, New York, Connecticut, Illinois, Rhode Island, Massachusetts, and New Jersey. Okay, so they're breaking it down to the states, which is cool. I was hoping that I could see something for a particular industry in here. So let's see. Let's keep moving here. I'm looking at this live as you guys are looking at it. Okay, so they're looking at the state information. Looks like they probably won't break down sectors. Because I want to say, hey, now that you're getting back to work, are travel people getting back to work? Who's getting back to work? And that could be an advantage for an investor, because we're going to look at the investor and say, okay, for your industry, so I can start looking into that particular sector to see what's going on. So now they're breaking down all the state information. I don't think they're going to have industries on the weekly. They probably have that on the actual quarterly report like they usually do. I don't think it's going to be on here. But and also when people are not filing for unemployment, that means that people are not being laid off. People are maybe going back to work. So that could be a good thing. All right, yeah. So what I was hoping to look in here, as they're saying initial job claims are decreasing, on the quarterly report, when they put out the unemployment numbers, they'll tell what sector was unemployed the most or what sector unemployment decreased or increased. So if I can see a sector, the first indicator of a growing sector is employment. So I like to pay attention to employment to say, okay, well, people are getting back to work and travel. That could be a potential. They are thinking that travel is going to go back. So then I can look into travel, or it could be restaurants, so on, so on. So, but anyway, it's a good indicator overall that less people are filing for unemployment, that we are seeing that number kind of start to decrease going back from a year to today. When you can see this big spike here. When it's talking about last year, you're seeing this big spike, and that decrease of people filing for unemployment is a good indicator. So shout out to all the employees out there that are getting back to work. Always good news to see people getting back to work. All right. So the next thing I want to look at is, let's look at real estate. Real estate is another good indicator of how the economy is doing, right? I had to take a little sip of water there. Always got to have the investor show cup when you read these financial reports. But the next thing I want to look at is real estate. It's the real estate market. How is it doing? Because the real estate market would give me a good indicator. Are more people filing for forbearances, which is keeping them in their home when they can't pay the mortgage? If people can't pay the mortgage, but they're keeping their home, I pay attention to that. So also, how many people are applying for houses? That's a good sign of how the economy is doing. How many people, when you go to purchase a home, you have to fill out an application, right? So they have data by the Mortgage and Bankers Association. They look at, hey, how many people are applying for houses? So that's the next thing that we're going to roll into. But before I roll into the Mortgage and Bankers Association, let me see what you guys and girls are saying in the comment box. Casey Peterson said, what's good, Chief Dykes? What's going on, Casey, man? Thanks for tuning in. Antonio said, good evening, investing family. Good evening to you as well. My man Jamesh White, he's down there in Florida right now. He says, money, money, money. Oh, yeah. So Brandon White says, dang, I have no idea they disclose newly discharged veteran. Oh, yeah. Oh yeah, Brandon White. Oh yeah, they look at newly discharged veterans as well. How many veterans are unemployed? And that's good data for any type of investor that's looking at it, right? All right. Of course, I'm making sure my messages I wasn't getting. Tony Siri, what's going on? He says, good evening. Good evening to you, Tony. Thank you for tuning in. And Tori Williams says, what's happening, my brother? Love your show. Tori Williams, man. Thank you for tuning in as well. Thank you for tuning in as well. All right, ladies and gentlemen, now let's get into the mortgage applications. We're seeing a decrease in mortgage applications. That makes me scratch my head. Why are mortgage applications decreasing? That means less people are filing for a house. If people are not buying houses, could there be a slowdown in the market? What's going on? So let's head over to the Mortgage and Bankers Association to see what do they have to say about this slowdown in people buying houses. So let me share my screen here. There we go. So this right here is from the MBA.org, Mortgage and Bankers Association. So coming out of Washington, D.C. on yesterday, the Mortgage and Bankers Association, they said mortgage applications decreased by 2.5% from a week earlier, according to data from the Mortgage and Bankers Association Weekly. The market composite index, a measure of mortgage loan applications volume, decreased by 2.5% on a seasonal adjusted rate, right? The refinance index decreased by 5% from the previous week of 13% from 1 year ago. So a lot of people was refinancing last year, not so many people this year. Now let's look and see who is this person speaking here? Okay, we're going to look at the MBA Associate Vice President of Economical and Industry Forecasting. All right, here we go. The devil's in the detail. So right here, the 30-year fixed mortgage rate increased by 3.36% last week and has now raised 50 basis points since the beginning of the year. In turn, shifting of refinancing incentives for most borrowers. Refinance activity dropped to its lowest pace since September of 2020. With this decline in both conventional and government applications, mortgage rates have moved higher in tandem with Treasury yields as the outlook of the U.S. economy continues to improve amidst the faster the vaccinations rollout and states easing pandemic-related conditions. All right. So right here you have it. You're seeing mortgage applications decrease, but they're saying the 30-year fixed mortgage rate has increased to 3.3%. So interest rates on mortgages are going up. Last year, it was nothing to get a 2%. Now you're looking at interest rates are starting to decrease because everybody's expecting with these vaccinations that the economy is starting to go up. You're seeing Treasury yields start to go up. So you're seeing applications for mortgages, applications for mortgages decrease because as interest rates for homes increase, it makes it less affordable for people to buy homes. So as interest rates increase, it makes it less affordable for people to buy homes, which can cool down the mortgage, the real estate market, right? Because let's say a $500,000 house at 2%. Oh, yes, I can afford that. But a $500,000 house at 4%, hey, that's out of my price range. So you can see interest rates can make homes more affordable. So as interest rates start to increase, you can see homes become less and less affordable. All right. Now, oh my goodness, all my stuff dropping. All right, make sure I got what everybody's saying. So the next thing we're going to get into, are just what we talked about. What companies, I want to ask this question as I go into the description box. Which companies benefit from rising interest rates? As interest rates right now, Federal Reserve interest rates are at its lowest at 0 to 0.25. And as interest rates start to increase, which companies benefit? All right. Which companies are going to benefit? If you don't know, you're gonna learn today. Yeah. If you don't know today, you will pick up today if you don't know. So anyway, comment in the box. Let me know what you think. Companies that benefit from rising interest rates. Okay, so here Brandon White said, my buddy can't get a house in Georgia. Houses are flying off the market too fast. Old folks showed up with straight cash. Seriously. Yes, a lot of people, even when I purchased my home last year, It was very competitive. It was a very seller-friendly market. And since from the time I purchased my home to now, it's been a nice little bit of equity that has came up. It's still a seller's market out here in the Denver, Colorado area. So yes, the real estate market, very surprisingly, when the pandemic hit, if you remember my shows during this time last year, I thought, oh, pandemic is hitting, people are unemployed, housing market is probably going to decrease. But the housing market didn't. I think majority due to forbearances. The government stopped people from foreclosing on homes, and interest rates. As interest rates dropped, it made houses very affordable. The house I have today, maybe I couldn't afford it if I had traditional interest rates. So interest rates dropped. People started refinancing, and it made houses more affordable. Now, Brandon White, you said, man, my buddy can't get a house with interest rates. The reason why is when you drop interest rates, what Jerome Powell did, the Fed chair did last year, when you drop interest rates, you're making houses more affordable. That in return is increasing the demand for people to go buy houses. People are like, hey, you know what? I was paying $2,000 for rent. And when I do the math, I can go buy a house with this money now because interest rates are so low. So as interest rates increase, hopefully it starts to cool off the market, right? All right, let's see what y'all say in the comment box. So y'all comment, let me know which companies benefit from rising interest rates. Interest rates are so low, they can't go down anymore. So interest rates are going to go up. When interest rates go up, who benefits? Let's Sip and Talk with Freeman says, good evening, Prince. Good evening over there on Twitch. Yes, ladies and gentlemen, I am on Twitch, Facebook, and YouTube live all at the same time. And of course, the playback will be on the podcast episode. So it's like I'm on Facebook, YouTube, Twitch, iHeart, Spotify, wherever you get a podcast, they're going to get the playback as well until I learn how to go live inside of those platforms as well. Al, what's going on? He said, what's going on, bro? What's going on, Al? Chavez D over there on Twitch says, finally caught the show live, Chief. Thanks to Twitch checking in from Gulfport, Mississippi. Gulfport, Mississippi. I can't look at your name and say who you are. But yeah, we got Twitch in the house. Okay, coming from Gulfport, Mississippi out there on Twitch. Brandon White said, if interest rates go up, is that a good for mortgage companies? Yes. It's kind of a catch-22 because interest rates going up, it will, yes, it's good for, yes, mortgage companies will make money. But if most people already have a fixed interest rate, let's take me for example, I have a 2.75. So I got a 2.75 and I don't care if interest rates go up because I'm fixed, right? So if you already fixed, interest rates won't mean much. It actually, I look at it would be advantageous to mortgage companies because less people will be buying houses. Less people will be buying houses as mortgage rates start to increase. All right. Tactical with the headlamp with the strap. What's going on, man? He said with financials like Chase, Wells, and Goldman. So he's talking about JP Morgan, Chase, Wells, and Goldman. Congratulations there. Tactical with a headlamp and a strap. That is correct. That is correct. When you look at the financial industry will increase. Why do you think the financial will increase when interest rates increase? Right? Let's think about it. A simple way to look at it. Companies will make more money off of when they loan out money. Interest rates go up. Banks usually benefit. So when you look at companies like Bank of America, your JP Morgan, your Wells, your Goldman, those are the ones who do well in this time. Now let's take a quick look at it. Here we go. Google, we're going to take a look at how has Bank of America looked so far this year. I don't want to go there. Let's go to just regular Google. I didn't mean my Gmail. Goodness gracious. All right, it went to the wrong one. Why did you do that? Okay, I'll give it 1 second to my computer. We're going to look at, let's go to Yahoo Finance, and we're going to take a look at, companies like Bank of America, who's caught a hot hand. So we all know the Dow Jones is kind of running the market right now. So the Dow Jones is running the market right now, first quarter. Here we go. BAC. All right. Here we go. All righty. All right. So let's look at the chart here. Let me go ahead and share this screen. Okay. All right. Let me go ahead and share this. Let me pull this up. So yes, as interest rates increase, banks benefit. So as we're anticipating more interest rates, if you're coming in, don't forget to hit that like, subscribe, comment, and share button. Okay, why my computer getting a little stucky here? All right, so this is Bank of America over here on Yahoo Finance. Let me make sure it's sharing properly. So this is Bank of America. So let's take a look at the chart and let's compare it to all the three major indexes. Three major indexes being the Dow Jones, NASDAQ, and S&P 500 so far this year. So far this year, Bank of America has quietly had a pretty good year, and a lot of financial companies as well. So you look at the beginning of the year, that's why, come on, Yahoo, get it together. Come on, Yahoo Finance, come on. So as you look at the beginning of the year, you look at the beginning of the year, where Bank of America came out at and where is it at now? A lot of people, and this, you know what, I'm going to get into something else about banks too. You're seeing Bank of America kind of going a little tear here. So they start out at $30 this year. Now they're up to $37 as of today. And with that being said, if you compare that to your Dow Jones so far this year, let's see if there's a light blue line. You can see how it has outperformed your Dow Jones. Bank of America so far this year up 24%. Dow Jones up 6%. So you can see Bank of America has quietly been on a nice little tear. This goes the same for JP Morgan, Wells, all the financial companies. As people are anticipating, this means the market is anticipating interest rates to return to not normal, but to go up a notch. I don't think maybe interest rate may go up at the end of the year, maybe next year, but I can't see that this year. But right now, financial companies have slowly been on a nice little tear. Outperforming the Dow Jones, I don't need to compare it to the NASDAQ and S&P 500 because I know the Dow Jones currently so far this year is outperforming all three of the major indexes. So as we're looking at, the question was for people that's coming in, what companies benefit from rising interest rates? So yes, you are right, technical headlamp. That is good. He said Charles Schwab, no, he's not Charles Schwab. He said Chase, Wells, and Goldman. Yes. Wealth management companies benefit from rising interest rates. Who else benefits from rising interest rates? Congratulations again at the technical headlamp on that. Chris said, Cheap Dice, have you invested it into NFTs or cryptos? Yes, I have $1,000 worth of cryptos. You know, I think I got into cryptos maybe earlier this year. I'm not into cryptos. I speculated. Y'all give me 1 second. Y'all give me 1 second here. My computer's getting a little sticky here. I don't like that. Little choppy. Let me close that out. Now, NFTs, I'm still learning about NFTs. I'm definitely interested in them. They sound very interesting. For people that I haven't spoke about it on the show yet because I haven't done enough research or spoken to enough experts to sit down and tell me about NFTs. But yes, I'm definitely interested in NFTs. Me being an author, me having so much content. I mean, I don't know how many interviews and podcasts and books and things like that, which the NFT market sounds very interesting. I'm definitely looking into it. I'm looking to get involved with NFTs, but I haven't gotten actively involved with NFTs. So there's no on NFTs. Yes, on crypto. I have speculated on crypto. I believe crypto is firming up. I believe the market is firming up for cryptos to be around. When I say firming up, I mean becoming more industrialized. Remember when credit cards kind of came out? Not everybody took a credit card. Only certain stores took a credit card. But it became industrialized to where everybody takes credit cards now. And I believe that cryptocurrency is kind of in that way when I'm seeing all these major companies. And I didn't even get a chance to do this on the episode, was Fidelity. Fidelity finally created a Bitcoin ETF. So having a Bitcoin ETF, that'll be something I'll be very interested in. But I see that industry kind of firming up. You know, you're seeing ETFs, you're seeing Tesla get involved, all these major companies get involved. Even though I'm speculating, I can't invest over there because I don't really understand the industry that well. I don't know what's making them go up and go down. It's a million coins over there. I have Bitcoin and I have Stellar, I think. Nothing much over there. It's just something I'm completely speculating on right now and just letting it ride and see what it does. But definitely, I believe crypto is firming up to become something. I know it's going to be here. I don't know in what capacity because there's so many. And I know the government is trying to get their hands into it. And I think the greatest threat to cryptocurrencies is regulation, because I think regulation is going to come some form of way. So that's my way of looking at it. But definitely looking at the NFTs. NFTs, I see a lot of people trading baseball cards, and the first tweet ever got sold for a couple million. Artwork, you know, I was a very, very early investor into this art company. Years ago. So I want to see, I'm going to hit them up and see if they're going to transition into the NFT space. But it sounds very interesting, something that I think is very fitting for our flavor of how everybody invests today. Everybody is digital, everybody wants it quick, fast. I remember the days of my brother having these big boxes of baseball cards and football cards or whatever. Now that stuff is kind of transforming into the NFT space, the digital collectible space. So I kind of like it. You know, all right. Over there on Twitch, he said, "Sorry." Oh, what's going on, man? Matthews from Gulfport, Mississippi. Okay, got it. I didn't see that name. Chavez. That's how you say it. Chavez. I'm sorry, man. I can't pronounce that well. Y'all don't pick at me. He gave me another thumbs up. Lucky's mom's out there in Jacksonville, Florida, Duval County. She says, "Good evening, Prince, and everyone. Good evening." Kid Kobe, good afternoon, sir. LA, California's in the house. California, we got who? California, Florida. I didn't know where everybody else is from. Brandon said Visa. That's Visa while trying to get my okay. He says Visa keeps trying to get me to sign up for crypto card with advertisements. Visa is another one. Wrong button there. Because if you got it wrong, it would have been this. But you got it right. So congratulations there, man. You got it right on Visa. Visa is another one. Financial industry. The financial industry usually profits off of this as interest rates go up. Now, interest rates and inflation goes up. Okay. Brandon said, "I'm super bullish on Bitcoin. Computer networks are sort of my thing. So I'm too bullish." Okay, because I think we're kind of halfway. I'm in that belief that we're already kind of digitized. The dollar is pretty digital, and with the dollar being pretty digital, I also believe that the Federal Reserve, they've already been the Federal Reserve is trying to build their own cryptocurrency. They're doing their research and they're building their own cryptocurrency or some form of blockchain. So my way of investing into that, somebody asked me that earlier. I like blockchain, definitely. I like the SI company, Silvergate. I like those type of companies that everybody's gotten into. I believe the companies that's giving the backing, because what is the magic hand that's turning my credit card? I can hook my credit card up to Coinbase and money gets pulled out of my checking account. And then I can go buy Bitcoin and Stellar, all these random coins. And then I can convert it back, put it back in my checking account, and then go buy a bottle of water. What magical hand is doing all that? I think that's the bread and butter. Companies like Silvergate, companies like Riot, I think those are going to be the ones that's going to excel the most. The fintech, the financial technology behind the cryptocurrency, the blockchain. All right. And this is my guy right here, Charles Barkley Golf Club Swing. Golf Swing. Oh, that's a hilarious name. He said, "I'm doing NBA stop, made a profit of $1,200 in a week." True story. You're talking about the NBA NFTs, Charles Barkley, Golf Swing on Twitch. So yes, we're on Twitch, we're on all these different places. So we got people on Twitch, Facebook, and YouTube all chime in at the same time. So are you talking about the NFTs on NBA stop? Answer that for me. So now, And he said, yes, yes, I can see that. I heard LeBron James' first dunk, Michael Jordan's first dunk in the NBA. People can sell their first whatever. Being an author, I can sell my book. I can sell pages of my books. I can sell my first ever podcast, my first ever, whatever. I don't know. So people are doing it, and creators, content creators, very good for them. People are selling their music videos, stuff like that. So that sounds very interesting, an interesting space. NBA Top Shot to be exact. Okay, NFTs. I'm definitely keeping an eye on that. I'm definitely, got my ear to the streets looking at it, very interested in getting involved with it. Haven't got it all the way. So we already said bank stocks do that as well. So now let's get into what the Federal Reserve, why you seeing bank stocks run up. If you look at Goldman Sachs, Wells Fargo, all the other good stuff like that. The Federal Reserve today just released, I'm going to go to the federalreserve.gov, and we're going to look at this report together because I'm always going to show you the data. They just released a statement on bank holdings. If we go back to 2008, a lot of companies did not have, give me 1 second, I'm making sure I'm not late for my next show. But the Federal Reserve and banks, the Federal Reserve, they do something called a stress test. So in 2008, when capital dried up. I want to sound country, even though I am. But as capital dried up in the market, the Federal Reserve came out and said, hey, they require banks to have so much in reserves, meaning they require, hey, banks, you must have this much money in the bank. And if you're below it, you got to do X, Y, Z. So the Federal Reserve, they controlled ever since 2008, probably was beyond that, but I know it was definitely enforced to make sure banks didn't go bankrupt. Banks couldn't lend all of their money. They only could lend a certain amount of money because they had to keep so much in reserve, which was controlled by the Federal Reserve. The Federal Reserve just put out a statement today, headed up by the Federal Reserve, Jerome Powell, which I'm going to share my screen, and this is going to be coming from the federalreserve.gov. This is not coming from what I heard somebody said. This is coming from the federalreserve.gov. So this doesn't get any more official than that. So right here, March 25th, today at 4:30 Eastern, the Federal Reserve announced a temporary and additional restrictions on banks holding company dividends and share repurchase currently in place will end for most firms on June 30th based on results from upcoming stress tests. All right. So the Federal Reserve Board, they're putting restrictions on what companies can pay in dividends or hold in dividends and what they can repurchase and things like that. But here from the Federal Reserve Board on Thursday announced that the temporary and additional restrictions on banks holdings company dividends and share repurchase currently in place will end for most firms on June 30th at the completion of the current round of stress tests. So they're saying after they do the current round of stress tests, a stress test is they put a financial institution, they go to Goldman Sachs. I went to Goldman Sachs headquarters in New York City probably like 2 months ago. No, not 2 months ago, like 2 or 3. No, it was longer than that. 4 years ago when I was at the headquarters, and they had just got done with a stress test. So the stress test, they go into these large banks like JP Morgan and Goldman Sachs, and they put them up under a ton of stress, like a recession, a depression hit, and it has to make sure they can pass a stress test of having enough money in the bank, having enough money in reserve. Can they survive? Because we learned from 2008, when banks start to lose all of their money, then the whole economical machine started to default. That's what put Blockbuster out of business. Blockbuster got put out of business because banks' money dried up and they could no longer fund their debt. They didn't have cash. They couldn't compete with Netflix and Redbox. At that time, if you watch that episode, what I talked about that documentary on, one of the lessons I learned there was that they didn't adapt. No. Blockbuster was online. They had blockbuster.com. They had kiosks for Blockbuster. So they was competing with Redbox with the kiosks. They were competing with Netflix by being online. And they had a bunch of stores. And what else they had? They had stores, kiosks. They were online, and they was doing mail services. So they was mailing out just like Netflix as well. But the difference was they did not have enough cash and capital to continue to grow. Because when Viacom brought them back in 1994, Viacom took all of their cash and brought Paramount. That's why Viacom CBS owns Paramount. They took the money out of, because at that time Blockbuster had so much cash flow. They said, oh, they took all the cash flow to fund Paramount buy, and then Blockbuster inherited a bunch of debt. They could not finance the debt because Lehman Brothers went out of business in 2008. The big investment company that was around 150 years went out of business in 2008, put Blockbuster in a very bad business to where they didn't have the cash to expand, to grow. Their money started to dry up. Netflix still had money. Redbox still had money. So guess what? They ran out of gas, essentially. So essentially, what happens is when this got grinded to a halt, this is what they make firms have so much money. So firms with capital levels above those required by the stress test would no longer be subject to additional restrictions as of that date. Firms with capital below those required levels by the stress test will remain subject to restriction. So companies, they're going to say, hey, if you have money over our stress level, you can go out and lend that. You can go do XYZ. So they're almost letting financial companies and banks open themselves up. This is why, if you look in the pre-market and in the post-market, a lot of bank stocks rose when this information was released. Right? So here, this was put out here. You can look at it, look it up right here on federalreserve.gov. And this is why we pay attention to finances. Because if you know what's going on in finances, you know what's going on in the world. Now, next, we spoke about real estate. And we're going to go back to interest rates. We talked about banks. We talked about real estate. And the third one will be, so we talked about banks. And also, I forgot, I even mentioned it. Real estate also is a good hedge. Let me see what y'all say in the comment box before I get into real estate again. Another bear said blockchain technology is neat, but Bitcoin and most other cryptocurrencies are too unstable. Yes, majority of those are unstable. All those, you go to Coinbase and it's probably like, or any other cryptocurrency or token company, it's like a million different cryptocurrencies out there. I don't know how to pick the right one. I don't get any financial reports. I don't know who created them. I don't know how many exist. I don't know any of this data. Right? I don't know what's coming out on Bitcoin, but I will go with Bitcoin because it's the biggest one. It's the largest one, and the markets kind of go out there. Right? So LK Ross said, I was at work today and missed my opportunity to buy calls. At least I was able to average down in one of my own stocks. Which one you missed the opportunity to buy calls on, LK Raw? Financial companies? And thanks for tuning in, LK Raw. Another bear gamer said NFTs are dumb. They sound crazy. I'm like, who would buy that? Why would you buy that? And now they just saw somebody just put their first house up on and I think they put the first house up for $500,000 digital real estate now. It sounds crazy, but I'm going to keep an eye on it. I love to look at things that are going to, Lucky's mom said, I saw that Fidelity filed the S1 filing to back a Bitcoin ETF. I speculate if approved. Yes, they did file an S1, Lucky's mom. I was going to do an episode on that the night before, but I didn't because I was still reading. I was still doing my research. I may put out one earlier tomorrow morning. What I do when I dig some more into it, but I did read. I got about 25% through that S1 filing. And what they're doing is they're not, from what I really was looking for, I wanted to know this ETF, which cryptocurrencies are they going to buy? Is it going to buy Bitcoin, Ethereum, and whatever? I was looking at which coins or cryptocurrencies it was going to buy. But it was stating something where I'm trying to give a metaphor to this, where it wasn't going to invest the money directly into the cryptocurrencies. It was just going to track them. Almost like like SPY, like SPY does with the S&P 500. It's almost like tracking them, but it's not going directly into them. So it was something like that. I didn't want to put out bad gouge, so I was reading more to get a better understanding. But yes, Fidelity, it was actually FD Investments, I think, a company that's under Fidelity, did file an S1 report with the SEC for cryptocurrencies. And I think it's going to get approved. Somebody's going to figure it out. We already kind of got one already with GBTC, but I think that once they do it, Charles Schwab is going to have one. A bunch of companies are going to have one. Heck, I might even create one myself if I knew how to do it exactly. But that's I think that's going to explode that industry if that is approved. And I think it will get approved. But that's good. Lucky's mom paying attention out there with the S1 filings. And if you don't know, who knows what the S? Lucky's mom, you don't answer. What is the S1 filing? All right, Brandon White said, I believe that Bitcoin will likely become more stable as the currency matures. Right now, ordinary dudes with a couple tens of millions of dollars can move the BTC market. Wait till the banks get in. Yeah, that's why I said I'm completely speculating on it. I think it's going to be here some type of way, but it's unregulated. It's pretty unregulated. Now, one thing I do like, I will be buying stock in Coinbase. I don't know if y'all saw the S1 filing on Coinbase, but Coinbase is looking to go public and their finances look amazing because they make money every time somebody buys and sells. So that's good. They're making a nice little, they're very profitable over there. So I'm very happy with them. I'm really going to keep an eye with them too. You know, LK Raw. Okay, Ross, all of them. Most importantly, the Qs. Oh, okay, the Qs and the SPY. I love buying them when they dip like this. You're right. I can see that. So he's talking about buying index funds on call options on the index fund when he's seen like a nice little dip. But at the end of the day, it dipped during the day, but it ended up. So I'm guessing you're looking at midday when it started out low, then it bounced back up at the end of the day. So yeah. Another Bear Gamer says, do you think unemployments are actually lower or just less people filed? I'm thinking I think unemployment is actually lower. Or do I think that some people just quit? Because that does happen. Some people just quit filing for unemployment. But in this market with unemployment, they just put out a part of the stimulus package. They just raised unemployment. So you make more money. You know what I mean? Maybe some people have pride, but you'll probably make more money if you went and took advantage of the unemployment that was going out. So I don't see why not. But I think that just less people file for unemployment. I don't think it was. I think that unemployment is actually lowering than less people file. And I don't have any factual data on that. I'm just speculating. All right, Brandon White. So let me put this out clear. I do own Bank of America. I do own some shares of Bank of America stock. So I want to put that out there. And I'm not trying to gas up the stock or whatever. So SEC don't come knocking on my door, right? All right, how much more time? Okay. Gotta get out of here. He said, Brandon White said, I'm about to go. He said, I'm all about the Coinbase IPO too. Yeah, Brandon White. Yes, you look at the S1 report, you will see why. Financially strong company. All right. So real estate, as we see interest rates increase, as we see inflation increase, it pushes up the price of real estate. Right now, the downside to that, less people can afford, but by pushing up the prices of real estate, you see in real estate is a good hedge on inflation and interest rates. So as inflation and interest rates go up, real estate is another one. We talked about bank stocks, real estate is another one. Another one is consumer discretionary, because this is assumed that if interest rates are going up, that unemployment is probably down, inflation is probably at a normal level. So we're raising interest, or maybe inflation is going up. So as inflation is going up, real estate is going up. Just the price of goods and services are going up. So you raise interest rates to kind of cool that off, but you can see how real estate can be a good one. Right now, let's get into what is a good way to invest in the real estate on the stock market. I know a lot of people say REITs. You can say REITs, but I got something new. I'm going to drop a gem today. What's another way? When I always thought about real estate, I used to always think about REITs, but I was looking for something. I don't believe in commercial. I'm very speculative of commercial real estate because of a lot of people are kind of moving away from commercial, but I'm very interested in residential real estate. How can you invest into residential real estate? I'm going to pull it up on this other screen. I want y'all to comment and tell me. I need to get my Jeopardy music. Oh, I got here's my other one too. I got a new little sound today. Here we go. Oh, I got a little drum roll in the cymbal. I think that's pretty cool. So let's pull this. Let me pull this screen up before I share it. Let's pull this screen up before I share it. So real estate, how can I invest into residential properties inside of stocks without using REITs? Is there another way? Is there another way? All right. So if you haven't done so already, so the question is, with the REIT market, we're looking at real estate, right? So now we're going to talk about, as interest rates and inflation increase, you're going to see less people. Max B, that's a pretty good one. That's a pretty good one. But it is true. Max B said McDonald's. So McDonald's, that's true. McDonald's is a real estate company that we all see with Robert Kiyosaki, who's been on the show here. He made that very famous in his book, Rich Dad Poor Dad, that real estate was if you watch the Founder movie, you will see McDonald's is more in the real estate business than the burger business. So right here, here's another way. Here is another way. Let me pull up. Let me stop this screen share. Let me add on to the other screen. Now, will I get Coinbase the day it falls out? No, I'll probably get Coinbase after its lockup period. Because look at Roblox. Remember we talked about Roblox lockup period. It came all out all hot. Now, what have Roblox done since it's been out? Because investors, we have amnesia. We forget about what happened yesterday. So right here, ladies and gentlemen, what I have pulled up on my screen, another way to invest into real estate without ETFs is, let me get a drum roll, please. Real estate ETFs. So right here, just a quick glance. This is one company, an ETF that I looked at. This is an iShares Trust residential and multi-sector real estate ETF. So right here, they say that this investment seeks to track the investment results of the FTS NARIT REIT, a residential capped index composite of U.S. residential, healthcare, and self-storage residential equities. So this is kind of like what Fidelity File. Like this is just following like Fidelity File for the ETF just to follow Bitcoin. So this is kind of what this is doing here. So this is saying right here, you look at the strategy, the investment seeks to track the investment results of the ETSE NA REIT, a real estate capped investments trust, U.S. residential, healthcare, self-storage, real estate. So this is going into residential, which I'm very interested in, healthcare, which I believe in healthcare because no matter what happens, I think we're the evident flow of life and death is you're born in a hospital for the most part. We're born somewhere in the hospital. We get sick. We go back to the hospital, most of us, or we die tragically, most of us, and back up in the hospital, and we go to a funeral home. It's sad to say we're all going to, no matter how much money you make or do or whatever, we're all going to end up probably on a cold funeral home table. So with that being said, the evident flow of life, we're born in a hospital, we usually die in a hospital, and we go out to a funeral home. So I believe in healthcare. I think that's always going to be there. And self-storage. So self-storage, most people that use self-storage are people who have houses with too much stuff. They may store their boats or whatever. So self-storage, I believe in. Healthcare, residential. That's why I kind of like this one, right? So this is his Tops Holdings, PSA, public storage. They're looking at public storages in here. Well over, I never heard of that company. Equity residentials. I like that one. Equity residentials. So let's take a look at equity residentials, but that's an ETF that you can purchase. So look at this company here, equity residential, right? Equity residential, just at a glance, it sounds like it's something I might be interested in, but I have to do a little bit more research. I have to go onto their website. But unfortunately, ladies and gentlemen, that's the gem for today. The real estate ETF, residential real estate is a big one I believe in. All right. So ladies and gentlemen, I'm going to have to get out of here and get running today. I would love to be with y'all some more and talk some more, but I have to get ready to do my show in Hawaii. So I have to do my show tonight in Hawaii. Over there, it's about 3 p.m. I think it's about 3 p.m. over there. I had the 4 o'clock spot over there. So I got to head over there, got to do that show, and that will be uploaded here as well. That will be uploaded here probably tomorrow or this weekend or something like that. But yes, also coming up next week on Tuesday, we're going to have the former senior advisor to President Biden. He was the senior advisor to Clinton, and he was the senior advisor to Obama, up under the Obama administration for Biden. And now he's starting a company where he's starting a TV show and a company where you can invest into pre-IPOs. Very interesting. Going to have him on to talk about it. His company, his business. And I love that whole idea because pre-IPOs are usually reserved for accredited investors, but now they're allowing to where regular everyday people can invest in the companies before they become public. So I definitely believe in that. Let me see what you guys and girls are saying in the comments before I get up out of here. C. Matthew said, don't forget about death care. Oh, yeah, funeral homes you're talking about? Brandon White said, good show, man. Appreciate it. Melissa P says, thank you. Anytime. And C. Matthew said, have a safe traffic. Hoorah. CBs. Oh, CBs. Oh, my. Yeah, you are down there in Gulfport. Yeah, down there in Gulfport. CBs. Oh, my goodness. CBs are cool. They're all right. Some of them. Very slim. I'm joking. Shout out to all my veterans, active duty, prior, all of the good stuff. Shout out to all the chiefs around the world as well. And ladies and gentlemen, thank y'all for tuning in. I got to get out of here. Thank y'all for tuning in. I love what everybody said. Clarence M said, great show. I appreciate it. Hope you guys and girls took something out of it. Do a quick recap. We talked about the stock market kind of consolidating and moving sideways. So that means the market is about to jump in one direction, bull or bear. So we're looking at financial data. We're looking at jobless claims starting to tumble. We're seeing jobless claims. Less people are filing for unemployment, which is a good thing. We're seeing mortgage applications decrease for houses because mortgage rates are starting to increase, starting to creep back up. Then we talked about companies or sectors that benefit from rising interest rates, one of them being banks. And we looked at the Federal Reserve, how the Federal Reserve, you're seeing banks have a great year so far this year, and how the Federal Reserve just released some of its restrictions on that. We looked at the Federal Reserve for that. And we talked about real estate, how real estate benefits from rising interest rates. All right. So anyway, ladies and gentlemen, boys and girls and children of all ages, I thank you guys and girls for tuning in. Until the next video, podcast, cartoon, or whatever else crazy you see me do around the globe, my name is Prince Dykes. Peace. Be safe. I'm out. Thank you.